Our final element of accounting are expenses. The definition of expenses are, it's an outflow of economic benefits or a reduction in inflows of economic benefits. The second criteria is an expense has to either decrease assets overall or increase liabilities overall. And lastly, it has to have the ultimate effect of decreasing owner's equity. So represented diagrammatically, an expense is anything that will decrease owner's equity, and there's two ways in which that can happen. One is in which assets decrease, which will be an outflow of economic benefits. The other way is if liabilities increase, which will be a reduction in inflows of economic benefits. For example, let's pretend we actually used our phone this month and got the bill in the same month and paid it. That represents a decrease in cash of $800, but we don't get another asset in return. There's no liability going up or down, so therefore owner's equity will decrease, or capital will decrease $800, therefore representing an expense. Another example could be we get the advertising bill this month and don't pay it. So in this case, we don't have any asset decreasing, we have a liability going up, in this case creditors. The other thing that will happen is that it'll decrease owner's equity because capital will decrease. Our accounting equation still holds. We have 0 on the left-hand asset side, and on the other side we have liabilities going up $1,500 and owner's equity going down $1,500. That still holds because it balances to 0. Looking at a very common set of expenses for a big business, these are for JB Hi-Fi. We've got sales and marketing, rent, administration, finance and depreciation, all of which are expenses we'll treat during the semester. Let's look at 3 particular transactions. I buy a computer for $2,000 cash, I make a loan repayment for $2,000, and I pay my monthly wages of $2,000. These are all examples of bank or cash leaving the business. However, will they actually all be expenses? Let's look at the first one. We buy a computer for $2,000 cash. First of all, I have less cash, which is an asset decreasing, $2,000. However, that's not going to be an expense. What will happen is I'll actually have another asset increasing, $2,000. So therefore, one asset going down and another one going up by the same amount, the net effect will be 0. Therefore, the net effect on owner's equity is 0, and that can't be classified as an expense. Going through our 3 criteria, was there an outflow of economic benefits? There was. Cash did leave the business. Did assets decrease overall? No, they didn't. One asset did, called cash, but overall assets, the net effect was 0. And lastly, that meant that owner's equity the net effect was 0, so it didn't decrease overall. A second example is we make a loan repayment of $2,000. So cash has decreased $2,000. In this case, again, it's not going to be an expense because owner's equity is actually going to be unchanged. What's going to happen this time is a liability called loan will decrease. We pay the bank back, we owe them less money, liabilities will go down. So what we have is assets going down $2,000, liabilities going down $2,000, so the net effect on owner's equity is 0. Looking through our 3 criteria, is there an outflow of economic benefits? Yes, there is. Are assets decreasing overall? They are. And lastly, is owner's equity going to go down? It's actually not. So that is the reason, that 3rd criteria, why a loan repayment is not going to be an expense despite meeting 2 out of the 3 criteria. Lastly, we have our monthly wages which we've paid. Cash will go down $2,000, but unlike our other examples, there's no other asset going up or liability going down here. This will simply be an expense which decreases owner's equity. The outflow is cash, the asset going down is cash, and the owner's equity decreases $2,000. One exception is drawings. Drawings are the owner withdrawing their capital from the business. Can be cash, can be other items. I'm going to use cash as an example now. In this case, cash has gone down $900. The other effect here is that liabilities won't be affected, but owner's equity will decrease $900. So whilst that does seem to meet the criteria of an expense in the form that there is an outflow of cash, assets have decreased and so has owner's equity, we're not going to classify drawings as an expense. Basically because the firm hasn't incurred anything itself. It hasn't been incurred in order to earn revenue, these drawings. It's simply just the owner withdrawing capital for themselves.